Hello, sorry, YouTube. Today we're going to talk about whether the Case-Shiller Index is flashing a sell signal to, let's say, California home sellers, or really home sellers. In my news feed today, in my YouTube feed, when you go to the channel, it pops up. I saw a whole bunch of Case-Shiller Index flashes warning signs. Now, it was interesting that it all popped up today. I don't know if that's because I've been blogging about it and Google knows I'm interested, or if there's sort of a concerted effort because it came from a lot of news sources all in one day. Now, I'm not going to address the conspiracy theorists too much, other than if in the past when they tried to take down George Bush and other Republicans, there was massive talk of recessions and problems, and it went on. Even though, like, if you go back, George Bush Sr., their economy was probably already starting to recover, but they didn't report on it. It looked like it was a mess. Sentiment was down. They got rid of George Bush Sr. I voted for Perot because he said, "Read my lips, no new taxes," but that's another story. It's possible they're organizing and engineering this, um, orchestrating it. I don't really care to talk about that. I want to get the facts out for the home seller so you can make good decisions. So first of all, I'm going to go back and say I was trading the markets back then, and I was very aware of the Case-Shiller Index when it was being made. And so let's just go over to it right now and see if I can talk to you about it. Now, oh, look at that. I already had it up. So that's what you were seeing. So it wasn't around back in the early 90s when we did have a sell off in California. I remember it because my dad's good friend put out 40 offers on houses in La Jolla and he picked up two at half price. I also remember my friends from the year before in law school got out. Some of them bought houses right away. They were like in the $100,000 to $200,000 range. And I remember one friend of mine saying, "My house is already down $20,000. I've only owned it for a few months." Right? So there was weakness. Now, he might have been in Riverside as opposed to San Diego, but I also know two friends who picked up homes at the very bottom of the market. One in Crown Point in PB, one right in front of Bird Rock in La Jolla. The Bird Rock guy surfed. He's probably still the happiest camper. He got a home in La Jolla for under $400,000 with a view of the ocean. Now, it wasn't a big one. He's put on and upstairs since then, but quite a time to buy a home. So I remember people argue, "Oh, houses never went down in San Diego." I know for a fact they did. I felt it. Now I remember the Case-Shiller Index itself not showing how bad it was compared to the data I had in San Diego, which we'll be discussing in a second. So I felt like my experience as a realtor and what was going on, how long it was taking to sell homes, what was going on, was a far faster index. And I would have loved to have traded the Case-Shiller Index because we had ups and downs during that period of time. But this thing's such a big overall national average, it was going down, 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 down. But I felt like I knew when the turn was happening because I remember there were like tax incentives that helped things come off the market. And then I sold like 20 houses in a month or two because the houses were up a little bit and all the buyers were super stoked. And I remember, and so they closed, and I was like, wow, this was cool. I even talked at California Association of Realtor conferences talking about what I was seeing, what was going on, and how to take care of things. And I explained when you're doing short sales, it has to be the long haul because when markets are going down like they do in the fall, the buyers get scared and they don't finish. You have to sell the same house 3 or 4 times. But in the spring, we're seeing a pattern when buyers think they're getting a deal. They all close because they can't buy another home anyway at those prices. And I remember discussing that and people saying, "Hey, it was a great observation." I go, "Well, I got it from a few people. I saw it myself. That's why I shared it." Now, the overall index. Okay, so let me just go and really preface this. This is the overall index. This is probably the unadjusted seasonally, and I think I have the seasonal one. No, I don't have the seasonal one. The seasonal one had a tiny bend. But this is such a large data set over such a long period of time. You're not really seeing what's going on. What this chart is showing, this is for all you traders out there that know like momentum charts and what you're doing. This is a chart. Oh, where is it? This is a chart of the momentum. This is saying price increases are going down. This is not saying prices are going down yet. But it seemed to me this index was pretty responsive because I remember the price increases and decreases not being very responsive. This is possibly a good indicator of momentum in the housing market. And there are technical analysts who say, well, momentum increases and decreases can point to turning points, right? Now, an example of 2 times being correct doesn't make me comfortable. I might trade on it, but I wouldn't sit there and go, I'd sell my house based on it. What I would be is aware. And I'd say that if I were thinking of selling my home in Southern California, I would be wondering, it's no doubt it's getting a little softer. I think we all know that, but it always gets softer in the fall. Not always, but it has. Pretty much every year, it gets softer in the fall. Here, I'm going to show you. Let's just review that. We're going to go. Here is InfoSparks. This is San Diego data from the MLS put into chart form. And let's go price per square foot. And then let's talk about, we're just reviewing them all. This is the month's inventory forecast. There's getting to be a little more inventory. It's still a seller's market. There's going to be a little more inventory in the actual. This is forecast as sales, homes on the market versus pendings, homes on the market versus sales. I would say somewhere between 6 and 9 months is probably a balanced market in most market areas. If you're in a luxury home, you probably will tolerate a little slower sales times because that's historically the case. Now, sales price per square foot, active listings, new listings, pending sales, sold listings. And again, this is the indicator I considered closest to the actual looking on the market and seeing what was happening. Are listings coming on the market? I mean, let me just say this. I was in Florida about to lose money on 4 houses. I was a real estate attorney out here in San Diego. I got married. Our house doubled in price. We took that money, went to Florida, and I had 4 houses. And I remember the biggest leading indicator was in the fall, early fall, could have been August or September of the year it sold off. Maybe it was 2006. A flood of houses came on the market in the fall. It was like 10 houses a day in a small market, Bradenton, Florida, that had been the leading indicator on the way up, or the last leading indicator. It went up 100%. The next fall, when I had 4 houses, it just collapsed. Multiple houses coming on the market. By November, when I got one of our homes on the market, the price was already down 30 or 40%. So the biggest indicator for me, super early, and I'm not saying that's going to happen in San Diego because San Diego was still a year behind. I had time in 2007. We sold all our houses. We went from $1 million in equity to minus $70,000. And then we had all our living expenses and stuff. We came back to California with much less money than we started with. And we rented. And people are asking us, in Bresci Ranch, where we're renting, why aren't you buying a home? And we could have bought a home. We still had a little bit of money left over. But the first few people that asked, we told them they didn't want to hear it. They were homeowners. They were sick to their stomach. I had already started blogging. I was just happy with my blog, upsidedownrealestate.com, which I'm going to start in the next few days, again, to track this. And I started getting, Riverside was calling. I was starting to get, within a year, I was getting like 8 calls a day to list my home. But the point is, Florida led California by about a year. I had time to move in here, get established, have a business, start making money before people realized their homes had gone down. And I was not going to tell people in Carlsbad that they should sell their homes because the first few times people just didn't like me and we had to live there. If people asked, I told them, but people weren't asking. People didn't want to know. So let's look at new listings. It's not going up, but seasonally, it's not supposed to be going up right now, right? So I would say, based on my experience, this is the time of the year to sell your home and downsize. You have more time to buy homes, and many buyers are also it's a little more relaxed time of the year. So at winterscheck.com, my 7-day home sales, I got to put all this stuff back up. It's currently on winterscheck.org, but I'm switching over to winterscheck.com. You can set up a free strategy session with me, and I'll talk to you about how I would, without burning out my real estate agents, I would do a little exploration to see how much I could get for my home using social media and Facebook. I would see if I could get some strong offers coming in. If I did, I'd talk to them and say, would you give me, I would try to buy a home without being contingent. I would try to set it up that way because my wife and I tried to buy one last year and we failed contingent. I know when I'm selling homes for people, contingent buyers and buying houses, being a contingent buyer costs you. You have to pay too much. You have to pay top dollar. There are ways to set this up so you're not a contingent buyer. I would follow that method. This is the time of year to do it. If you're downsizing, if you're thinking of selling, if you're moving to Arizona, let me introduce you to Phil, an agent in my office, my friend. He's in Arizona right now flipping homes. He knows the area well. If you're selling here in San Diego, you want to move to Arizona, especially the Phoenix area, all around, whether it's Prescott or places with great schools, because that's where Phil moved. I've got the connection. We will work something out with you. It would be fantastic. I believe it'd be a great experience working with Phil. He's one of the smartest, most knowledgeable guys, and he's flipping homes in Arizona right now. He knows how to buy homes. So if you're thinking of doing something like that, I think now's the time to do it, right? Lock in your gains. Hopefully you've had some. I know when you're trading the markets and you watch these guys who are really, like, if you're following the stock markets, there's guys who have been long, and then they're like, oh, it's time, and then actually it's the reverse of that. It's guys who've been sounding the warning alarm for a long time, and they're like, well, we've been long and now we're locking in gains, but now it's time to sell. No, you've been short for a while and you're hurting unless you're the world's greatest trader and you forgot to tell us about it. I don't want to be that guy. So let me just say, for the first time, it was yesterday, the day before, I did a post and I said, I think about selling. I've thought about it further. I followed this stuff. Let me just clarify. I am now saying, if you are thinking of selling, I would lock in. I would lag out of this market. I would set up a buy on a smaller home. I would set up a buy. I would roll money out of my one home or my investments and move it into two homes in that first-time home buyer category or the lower category. Because if you go back and you remember, and I think this is going to happen, this would happen again in a sell-off if it happens. The higher end compresses, but those first-time home buyer, if people with jobs, the homes they can qualify for, those houses are still pretty competitive in California because only 50% of Californians have houses. Let me remind people of this. This is a really sort of sad indicator. It's housing recoveries without homeowners. So this is home ownership rate in the United States. It's at 70. Oh, look at that. It's 64. Did it just say 64%? I don't see how it could be because it's over the 75 number. But in San Diego, in California, it's closer to 50%. So there's still built in a lot of buyers. And they're probably in that lower category and they've been renting. And they will, if they think the sell-off's been sufficient and the homes are coming down into their price ranges, if it was like last time, the minute they think that it might be a bottom, they'll be buying along with the investors. So I'd say that first-time home buyer category is where the investors will be shopping. It's where the buyers with jobs will be shopping. So I would lag out of my expensive homes and buy that first home buyer category in San Diego. Like, I don't know if I'd run up to Temecula right now because we know they got hammered, right? I think we've got to talk. I'll try to discuss this in videos. I'm going to start up upsidedownrealestate.com again. I'll put a web page up there, a simple website. But in case we sell off, I'm going to be on top of it for you. But for now, if you're thinking of selling, it might be time, if you have a bunch of houses, sell one or two. It might be time to downsize if you're thinking of doing it. And the fall is a good time because you can be a more relaxed buyer. John McConnon, winnerscheck.com right now if you'd like to talk. Thanks. Talk to you later. Bye.